Down about 22% from their highs back on August 4th, which is putting them now in bear market territory. Investors are concerned about the government slowing back lending, which reached record levels in the first half, and that helped send the Shanghai Composite Index up 90% before this recent decline. The benchmark, though, is still up more than 40% on the year so far, and our next guest says that Chinese stocks are actually stabilizing. Our friend and foe, Francis Lun, rejoins us here in Hong Kong, where he is General Manager at Fulbright Securities. Nice to see you once again, Francis. Good morning to you. You know, the last time I talked to you, I think it was back in June sometime. Yeah. And you said that investing is more about sentiment than fundamentals.
Definitely.
Is it still the case?
Surely. The last 2 weeks we saw the fear index, the VIX factor, the fear factor dominating the Chinese market. Last week, Monday and Wednesday and the Monday of this week, we saw the Chinese market down by more than 5% each day. And there has not been really too much bad news, but it's just the fear of the investor that the government will clamp down on liquidity. That caused the market to dump the investors to dump their shares. And it only stabilized yesterday because the government, the CSRC, the Chinese Securities Commission, approved a fund to buy into the market. So that helped improve sentiment a little bit.
Do you think Shanghai will fall even further from here?
I doubt it, because we are September now. It's only a little bit more than 3 weeks to the national holiday, the National Day, October 1st. This is the 60th anniversary of founding of PRC, so they don't want anything to happen. They want everything to be stable and in harmony. Yeah,
so what does that mean? They're going to keep loans at this pace? Yeah, inject more money somehow?
Well, I think what they will do is that they will approve more stock market funds and allow them to buy into the market, because the Shanghai Composite Index reached 3,400. Now it's down to maybe 27, 2,800. So it's down a little bit. So it's it's a good time for bargain hunting.
Right. You said 2,700 for the Shanghai. We're in a bear market, but you think it's going to stabilize?
Yeah, it will stabilize at this level. I don't think it will fall down to the 2,500 level.
Okay. So now it's time to go bargain hunting. Is that right?
Yeah, that's right. That's right.
What would you advise people to buy into then?
Well, of course, you don't want to buy into industrial stocks.
You're the second person to say that today on the program, you know that?
Because in China there is overcapacity in every single industry, from steel to cement to glass.
We have a 4 trillion yuan stimulus package. It's going to infrastructure.
But many of them spend the money at the wrong places. They build cement factories, plants, and steel mills that produces goods they have no markets for them. So I think it's much safer to stay with properties and financials.
Properties and financials.
Yeah, at least if the government wants to increase liquidity, these two sectors will benefit. So I think it's safer to go with these sectors.
Now, Francis, would you say for investors to buy these Chinese shares if they get allocation on the mainland, the A shares, or buy them here in Hong Kong, the H shares?
Actually,
cheaper.
Yeah, people are buying the A50.
Right.
Yeah, 2823.
Right.
Because it has been consistently one of the top most active stocks in Hong Kong. A50, 2823.
Okay, let me try to call this up. But 2823 is the code, right?
Because it basically tracks the leading 50 A shares in China. And it is very heavily traded. So it has the liquidity for big investors. And also it has derivatives. It has warrants and bull and bear calls. So you can, if you're bearish about the Chinese market, you can always hedge it by selling short.
Right. Okay. So this is the A50 China Equity Tracker Fund, traded here in Hong Kong, listed here in Hong Kong.
Yeah, that's right.
2823 Hong Kong is the code. Let me just ask you though about since we're on Hong Kong, let's talk about the HSI. You said there's a floor for Shanghai at 2,600. What about the HSI? Well, I keep hearing 19,500.
Yeah, it's about that, because if you look at the chart, okay, ever since March 9th, the market has been creeping up slowly and has gone through 3 cycles, up and down cycles. Okay, you rise up about 4,000 points and then retreat about 2,000, and the rise gain 4,000 and then retreat 2,000. So this time the market went down to 17,200 and then went up to 21,200, but now it's gone down almost 2,000 points. So I think we are close to the support level right now.
Close to the support level, and of course at those levels, time to go in and buy. Is that right?
Yeah, that's what I think it's good time to buy now. The market up slightly, so I think the worst case it will fall to maybe 19,200, and then you will have the crossover, what they call the golden crossover, the 10-day moving average line falling below the 50-day moving average line.
Okay, well, Francis, we have a viewer email that's just written in, and we have Michael saying he wants to ask you about these 6 IPOs that might be coming to market, the ones
of course,
on the real estate front, or actually some are real estate.
Of course, the 2 big ones, the Metallurgy Corp and the Sinopharm. Yeah, these are the two that people will be buying, and actually there are a lot of speculators are buying into the stock. Because we have inquiries from many mainland sources. They say they will pay 5% or even 10% premium to get the shares.
Oh, really?
So you know for sure that the speculators are on the hunt for these shares. It's almost a guarantee that the share will shoot up.
So guarantee the shares will shoot up, so you should buy into these
That's
IPOs.
That's right. But the only problem is that you may not get enough of them.
Oh, that's true. Allocation, always a problem, Francis. So, okay, stick around. We're going to talk a lot more about the Hong Kong Chinese share markets after this. Let's get back to our discussion on Chinese shares traded here in Hong Kong and also on the mainland, and bring back in our guest for the second half, Francis Lun, General Manager of Fulbright Securities. And Francis, let's get into some of your stock picks. And one of them, you mentioned them earlier, that you would buy into property stocks right now. But as you said, property prices have gone from ridiculous to now absurd.
Definitely, most definitely. Because now the new home flat prices now going for something like 25,000 Hong Kong dollars per square foot. So buying a tiny flat in Hong Kong will cost you 10 million Hong Kong dollars. And that pushed 99% of the people out of the housing market already. Because according to IRS statistics, less than 10,000 people in Hong Kong earn more than $1 million Hong Kong dollars a year. So that means only 10,000 people can afford to buy new homes in Hong Kong. So I think we all have to live in government subsidized housing now, even the professionals.
Right, maybe not you, Francis, but if that's the case, I mean, so then what's the thinking of buying into these property stocks?
Well,
because
they are making so much money that each one of these property tycoons, they are so fat they weigh more than a ton a piece, you know. So they make so much money that their stocks have to go up.
Okay, which stocks?
Of course, you talk about the big ones, okay? Cheung Kong and Sun Hung Kai.
That's a fat cat, all right.
Yeah, definitely. And also New World Development, because their masterpiece in Tsim Sha Tsui is selling, well, not like hotcakes, but selling at outrageous prices. So nowhere in the world can you see property developers making such obscene profit.
Oh, well, speaking of obscene, let's talk about BYD, because this stock made news earlier when its chairman said that Warren Buffett could be buying more shares, raising his stake in the company. But, we talked about BYD, and its multiples pretty
60
expensive.
Times.
Ridiculous.
Absolutely ridiculous. You will reach 50,000.
But why is it worth buying into? You said it's worth buying into. Look at that, 421%.
Yeah,
I mean,
it's gone up from $10 within half a year, from $10 to almost $50, and most probably because of speculative buying, because people just buy into the name of Berkshire Hathaway. That's all.
So if that's the case, why do I need to keep buying into this? Why am I chasing the gains?
Well, the problem is the market is built on sentiment, not reality. So even though BYD has not sold a single electric car, but people traded it as it would dominate the electric car market in the future. That's the sentiment.
Yeah, also the Buffett touch as well.
Yeah, that's right.
That definitely helps. Okay, well, thank you so much. Nice
You're
seeing you once
welcome.
again, Francis. Francis Lun of Fulbright Securities.